Since we are in the thick of the earnings, let's shift focus to the top 5 private lenders and their numbers in Q3 FY24. What are the big trends that we are catching at this point in time and this particular result season, which have been the winners and the losers? So let's go across to my colleague Gaurav, who is joining us live to help us understand what are the big trends in the banking space.
So yes, Rishi. So when we talk about banking, we have seen that most of the banks have been going low, and this has been the trend in this earnings season. So what has changed basically? We can focus on some of the fundamentals that have been changing for the bank. So first, let's talk about the deposit ratio. When we talk about deposits, most of the banks have reported inline numbers, but deposits have been somewhere low when we compare it with on a QOQ basis. Specifically, if we talk about the HDFC Bank, we have seen that deposits have been going down, and there are concerns coming up on the deposits. The LDR ratio is at 110%, which brings another concern that if the bank needs to grow their loan book based on the deposit, how they are going to sustain the cost of funds and how the loan book growth will be. So that is why we saw that HDFC Bank was down almost by 14% in the last 5 days. Let's also talk about the loan book outlook. When we talk about Axis Bank, we have seen that the numbers were largely in line. The bank reported very strong growth, but the commentary somewhere, if we have to highlight some of the commentary, they believe that the high advances growth are going to converge with the systemic deposit growth, which is somewhere in the range of 13%. Now, this again may bring some kind of concern that the advances growth is going to slow down, and that is why we saw some kind of negative reaction coming up in the Axis Bank despite the results being strong in this quarter. Let's also look at the CASA ratio, because most of the CASA ratios for all the banks have been falling down in this quarter, and this has been a trend which is going to sustain according to the experts also and according to the bank's commentary as well. Let's also look at the NIMs, because Street is a little worried that maybe the best is behind us and maybe the NIMs are bottoming down now, and we may see some kind of downtick in the NIMs from going, from this time, from the next quarters as well. Because if you look at the Axis Bank, ICICI Bank, HDFC Bank, both IndusInd Bank, they reported somewhere flat or a lower NIMs, which were again in line, but this again is going to be a risk for the bank's earnings season. Let's also talk about the credit quality. So when we look at IndusInd Bank's results, the credit quality the results were in line, but what happened in the bank is that gross slippages increased by 500 crores in this quarter, and they also utilized the contingent provisions for 200 crore rupees, which was actually not what the street was expecting and definitely not what the management had also guided. And that gave some kind of negative impact on the IndusInd Bank's results. After the results, the bank was down almost by 10% in the last 5 trading days. And lastly, let's also talk about the HDFC Bank, because the LDR problem, the LCR problem, and that is all going to take the toll on the bank, and that is what we have seen in the HDFC Bank as well. So from here on, if we look at the upside potential, and based on the consensus number, we have Axis Bank, which has upside potential of 19.6%, Axis Bank providing an upside potential of 18.8%, IndusInd Bank having 26.6% of upside potential, Kotak Mahindra Bank offering 15.9% upside potential, and lastly HDFC Bank with a big upside potential of 35.1%. So despite the strong results, these are the key concerns that are happening in the bank, but still brokerages are being bullish on the banks, and we may see some kind of upside coming up in the next quarter as well.
All right, thank you so much, Gaurav, for joining us today and helping us understand the trends that we are catching at this point in time for the banking space. But indeed, brokerages continue to have and maintain their positive stance. Thanks so much for that. But with this, let's move on and let's get the expert take on the banking space and some of their top recommendations at this point in time as well, because for today, the banking is indeed doing great for itself. So let's try and find out some of the stocks that could provide you good returns from here on. With this, let me welcome on board two of our very special guests, Vivek Karwa from Riddhi Investment, as well as Kunal Bothra on the technical front, joining us live. A very good morning to both of you. Firstly, Vivek, what's your take on the banking space? Because especially on HDFC Bank, which just yesterday hit its 52-week low level. Nobody was expecting such kind of a fall in HDFC Bank. But what's your sense that is this a good time to enter in a stock like HDFC Bank? And other than that, what's your take on the overall banking space as of now?
Good morning, Shrishti and everyone. First of all, I should give my overall opinion. I am quite bullish on banking and financial services as a sector. Now, if you look at the upside potentials mentioned by your colleague, you'll find that most of the brokerages are bullish on this. The main reason being these banks have not participated in the bull run till now. And overall, the valuations look pretty good. So most of these numbers, whatever the banks have declared, are either moderate to good. They are not bad as such. And in fact, HDFC Bank was punished more than the quality of numbers. So they are not bad. Small cap banks have declared better numbers, Bank of Maharashtra, or there are so many other PSU banks which have declared good numbers. But the valuation comparison, if you look at the downside potential in large five private sector banks, is quite low compared to the small cap banks. And if you look at the warnings given by RBI about the stress in small loans, I think if something that like that turns out, large cap banks would be more better placed than small caps. So my bullish view would be on the large cap banks. And as a disclosure, today at 14:30, I have asked all my clients to buy HDFC Bank.
All right, so that's the take coming in on the banking space. Continues to be bullish and continues to be a lover of HDFC Bank. That's the take from Vivek. But Kunal, since we are seeing a bit of a rebound, is this a good time to enter in HDFC Bank? And apart from that, what's your take on the banking space? Because just yesterday, Nifty Bank was hammered. The kind of recovery that we are seeing, what's your take on that and any of your stock recommendations?
So I think what we've done so far over the last, I think 7 days or 6 days of the market correction is we've managed to retrace back towards the 200 DMA for the Bank Nifty. Today I think we managed to have a touch and go moment below the 200 DMA for a certain amount of time for the Bank Nifty. But I think from there, from the sub 44,500 mark, we managed to recover and come back towards 45,000 mark where we are trading right now. Now the question over here is that what we've seen the last 6-7 days is a massive build-up of open interest on the short side for these private sector banking names. I think that stance has to change for these stocks to make a comeback. And I have always believed that many of these stocks, they don't form a V-shaped recovery, but they would probably get into a double dip or a double retest of the support levels. So I think we'll have to wait out for now 1385 as a critical support for HDFC Bank. If that doesn't get breached, say in the next 5 odd trading sessions, then we could be looking at a probable major bottom formation happening for the stock. So I think one has to be patient over here, not to venture into the stock as of now, but I think maybe over the next 4 or 5 days, we could get a lot more clarity as well as confirmation in terms of technical data.
All right, so that's the take on HDFC Bank and the rest of the banking pack as well. But